Now to CNBC's Dom Chu for more on the economic impact of this bill. Dom, with news that it looks like this bill will pass a short time from now, how are markets reacting? What does Wall Street think about the impact here?
So that's the lens that we're looking at all of this through, Willie. And to be fair, we've been watching it happen over the course of the last several weeks, because the market does become, for whatever it is, a kind of handicapping or discounting mechanism for everything that's developed. So we've seen the iterations from the House. We've seen what they sent to the Senate. We've now seen what the Senate has sent back to the House and what the reconciliation looks like now. And all during that span, what the markets have done is make a slow creep higher, but to record highs. So as the market tries to assess what the actual impact will be from this legislation, the thinking incrementally has been, as each version of this bill has progressed, it is now going to be something that could perhaps stoke economic growth. Now, there is a massive debate, of course, because that's the reason why House Minority Leader Hakeem Jeffries is addressing the chamber right now to make their case against this. There is a debate about whether or not those types of growth profiles come to their full fruition. But for right now, many of the Wall Street folks that we are talking to here seem to feel as though if this bill does pass, that it could unlock a growth profile for America that could lead to higher markets down the line, hence the all-time highs. So, again, we don't know exactly what it's going to be like. We have a lot of projections on this. But the idea that Republicans have somehow seemingly come together to get behind this, even when Texas Congressman Chip Roy called it, quote unquote, garbage just yesterday, seems to imply that perhaps there is enough here that makes everybody happy or less happy enough where this can actually get something done and be good for the economy.
I think you just coined a new term, Dom, less happy enough, which will have to be good enough for now for some people. Dom, so what about the idea of $3.3 trillion of debt over 10 years? Does that not factor into the calculations that some of these markets are making?
Sure, it does. And one of the things that we look at with regard to just how much that debt or projected deficit could factor into this is what happens with the bond market. One of the places that you will see that play out more markedly is in U.S. sovereign debt, the Treasury market, right? And that's the 10-year yield. Interestingly enough, we have seen over at least the short term a slight tick higher in just the last couple of days. But if you look since the highs that we saw over the course of the last 12 months, we are still relatively low. Oftentimes, when you have real debt concerns, deficit concerns, it leads to a sell-off of U.S. government debt. And what that does lead to is higher interest rates. We're not seeing a massive surge higher in U.S. debt interest rates, meaning, at least for the time being, that some investors and Wall Street traders out there are looking beyond some of the deficit concerns. Now, if there were pervasive deficit and debt concerns tied to the so-called big, beautiful bill, what you could see is a spike higher in interest rates. And one of those terms that has been tossed around going back now a couple decades is the bond vigilantes, right? Those investors or traders who punish U.S. sovereign debt because of things like deficit and debt management. We're not seeing that just yet. So, Willie, that's something that we're going to be watching for if it does come to fruition over the course of the next few weeks.
And we should point out one of the reasons perhaps the market corporations like what they're seeing out of this bill is because it makes permanent the 2017 Trump tax cuts, which includes a reduction of the corporate tax rate to 21%. So we'll keep a close eye on what's happening in the House. Meanwhile, President Trump says the United States has reached a trade agreement with Vietnam. He made that announcement in a social media post yesterday, writing the deal includes a 20% tariff on Vietnam's imports, and that the U.S. will have access to Vietnam's markets without paying tariffs. According to the president, Vietnam also agreed to impose a 40% tariff on goods made in other countries, but routed through Vietnam before being shipped to the United States, a practice known as transshipping. Think China there. It's unclear from Trump's post when the deal will take effect or if it has been officially signed by both parties. The 90-day pause on many of President Trump's reciprocal tariffs, by the way, set to expire next Wednesday on July the 9th. So, Dom, we take the president at his word here for now. That's all we have, is what I mean, that he just posted this on Truth Social. We haven't heard any kind of official announcement from Vietnam or from the United States. So what is inside this deal? This is sort of the rationale for all these massive tariffs that President Trump has been placing, which is, I'm going to bring people to the table and we're going to make a deal. But obviously, even bringing the rate down to 20% is much higher than it was before he started putting tariffs on countries like Vietnam.
Sure, Willie. Okay, so here's the phrase I've heard over and over again since that announcement came out from the White House on Truth Social, all the official channels. The phrase that I've heard, Willie, is the devil is in the details, right? It's kind of cliche. That's coming from all parts of Wall Street, Main Street, K Street, for that matter, that we've spoken to here. So here's what we know. President Trump announced that bilateral agreement, right? 20% tariff on goods exported from Vietnam to America. The U.S. will have tariff-free access to markets in Vietnam. That compares to the 46% tariff that was threatened to go into effect if a deal was not reached before the deadline. During this 90-day negotiating period, remember, that tariff went down to 10% to allow time for this deal to get done. Another point of interest has to do with something that you just referred to for that transshipping. You mentioned China. That's a big deal because this is when goods are made in a country, shipped to another country as a waypoint before then making their way to their final destination. Transshipping can be used and has been as a loophole to tariff policy. But sending goods to a country with lower tariff rates that the originating country already has. In this agreement, the president says that Vietnam has agreed to that 40% tariff on transshipped goods. Now, here's where the devil in the detail stuff comes into play. Beyond those broad strokes outlined by the president, there hasn't been any disclosure about whether there will be nuance or exceptions on any goods or types of goods in particular. So you think back to trade negotiations between the U.S., Canada, and Mexico, exemptions for things like autos. It's also unclear whether this is a done deal, which has actually been agreed to and signed by both the U.S. and Vietnam. We're still waiting for some kind of official statement from the Vietnamese government itself. There's also the question of non-tariff barriers, which has been a real sticking point for many of these negotiations between all of our trading partners, even if there are not explicit tariffs on certain goods. The ban of certain imports on certain things or putting specific product standards in place that preclude certain goods. Also, the currency, the foreign exchange, how you let your currency appreciate or depreciate. Analysts are going to be looking for a lot of details on that. And I'll end on this, Willie. You mentioned the China factor with regard to transshipping. Yes, the trade negotiations are still ongoing with China and the U.S., but how will Beijing react to the transshipping clause that was mentioned? Transshipping is seen by some experts as a jab at China, which does send its products through Vietnam as a waypoint for certain products to other markets. So how will Beijing react to a deal where Vietnam says it may see it as a way to throttle Chinese exports through that market? Those are just some of the issues that a lot of details are going to be sought after by economists, analysts, company CEOs, and consumers, of course, Willie. They're waiting to see any kind of detail on those fronts.
Yeah, so are we. CNBC's Dom Chu covering a lot of ground for us this morning. Dom, thanks as always. Joining us now.